Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Gale, founder and CEO of Panther Protocol, to discuss why blockchain interoperability is crucial for the future of finance. Oliver, it's great to have you with us. Welcome to Trade Talks.
Hey, thank you very much for having me. It's a pleasure to be here.
You got it. And we know blockchain is public by default. All of your transactions are publicly available on the blockchain. If someone identifies your wallet, however, you lose the privacy you're entitled to. So, Oliver, explain to us why blockchain interoperability is crucial for the future of finance and privacy in the digital world.
So interoperability, it can occur on multiple levels. It's crucial to have it at the blockchain level so that the systems can interact. Different chains have different trade-offs, whether it's speed or security, privacy. It may be the applications built on one chain which are not available on another, NFTs, etc. So it's important when you're interacting as a everyday retail Web3 user that you're not forced to deal with the complexities that sit behind these blockchains, and that you're not forced to be switching and swapping wallets and systems at all times. So interoperability and bridging becomes very important as a mechanism for improving usability, and with that comes a set of trade-offs with bridges, which generally will reveal the transaction data in the same way that the underlying blockchain might. So it's not specifically a problem that the bridge alone has with privacy. In fact, most blockchains have leak privacy. And so we really are working to address these type of problems and restore users' privacy and their right to privacy.
How would you ensure compliance with interoperability?
So compliance is a different type of interoperability in some sense. You've got typically financial institutions, each of whom they may be globally distributed, so they're subject to different regulations, and even within a jurisdiction, each institution has some leeway to determine the risk appetite it has. And the result of that is that if you want to have an account with one institution and with another, you have to do compliance at both of those institutions. That poses major problems and imposes a lot of cost on the financial system, storing the data, replicating it, the risk of it being hacked, and so forth. So privacy is actually a fantastic tool using zero-knowledge proofs to prove that you have been verified, that your transactions are legitimate, that your identity is legitimate, without having to go through the compliance process again. And our expectation is that this is going to save the finance industry billions and billions of dollars once these systems come into production.
Oliver, I was reading in your notes that you mentioned this can be applied to everyday life. Explain to us how so.
So imagine if you were walking through an airport, and airport systems have developed quite significantly in some parts with facial recognition, scanning and passport scanning, as opposed to the old interview process. Well, there is a mechanism using, again, zero-knowledge proofs where you can actually verify that all of your credentials match without having to disclose any underlying data to that party. The same type of authentication can apply to financial services. Hey, you don't need to know who I am. You don't need to know anything about me. All you need to know is that I am verified, and here is a zero-knowledge proof of that. What that does for interactions around compliance, systems authentication, credit scoring, taxes, and so forth, is it allows each of us as individuals to interact compliantly without giving our data away. And that data is the all-important asset in this data economy that we live in.
Where does Panther Protocol fit into the digital asset ecosystem, and what solutions are you providing?
So Panther Protocol is building what can be best described as privacy middleware for Web3. So it's a cross-chain protocol that really sits on the back end of services and allows users to really toggle the switch and say, I would like to conduct this transaction privately. I would like to authenticate this mechanism without disclosing my data. And so we work as a DeFi middleware in some sense, and enable private bridging, private DeFi transactions, private prover and verifier functions for other systems. It could be voting, it could be compliance. And where Panther sets itself apart is that we have really been focused on this marriage between compliance and privacy, which is a tricky problem to solve, but nonetheless, it's an important one that our societies need.
Oliver, are you concerned about KYC when you're trying to marry, compliance and privacy? What about the know your customer part of it?
Yeah, I think it's very important. What really concerns me today is the recent U.S. Treasury sanctions on Tornado Cash and the way that those were brought down. Now, uh, absolutely, I think there's a major concern with things like money laundering and illicit activity, and that needs to be, that the regulation is designed to protect society and citizens against those things. So I think that's critical. The challenge and the problem that I see is that regulators have taken a blanket approach to these type of sanctions, and they're not differentiating between who builds technology and who operates technology. And I think it's the operators that are the ones that need to be regulated. They're the ones that need to enforce compliance. What we're seeing is this threat that actually code is going to be sanctioned, and that hits straight on First Amendment rights, the right to freedom of speech and expression. And so that's a slippery slope. And I think we have to be very careful how we navigate those waters.
All right, Oliver, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.